Good evening, everybody. Hope everybody's having a nice fall evening. Let me change the screen here. This one, unfortunately, again, we're going to be a little bit shortened tonight. I've got my contact in, but it's uncomfortable, but I've got to have it in or I can't even see the cursor. So what we're going to probably do tonight is do a little bit more analyzing of what a chart is telling us versus uh, kind of delving into the signals per se. So, um, as we can see, the Dow is still moving up nicely, but we also can add our other elements of what to expect from human nature. Look at the occurrence that happened yesterday. Well, hold on for a second. I can see this is not going to work. Hold on, I got to take this contact back out. Okay, that's a fine howdy do. Let me see if this is going to work. Okay, I can see. All right, so this is now more kind of analyzing what price movements usually do. First of all, we know that if we see a gap up in the overbought area, the Japanese rice traders tell us to start watching for. Yeah, I got the magnifying glass here. Um, uh, so, volume is low. Let's move this up. How's that? So, we can see that there really hasn't been any change of investor sentiment. But what can we kind of expect? First of all, when you see that gap up in the overbought condition, you look for potential selling. Now, when you also see a breakout or breakthrough of a resistance level, especially getting up near the top, there's always that possibility that they will come back down and test the 50-day moving average, or at least the T line, to see if they're going to act as support. And there's a possible doji sandwich also. So because of the doji rule, it makes it much more easy to analyze what the market might do tomorrow. So obviously, if they open up positive, the doji rules play in effect that we're going to go higher. If they open it lower, then probably the testing of either the T line and or the 50 is probably in a good prognosis. And the reason for being prepared for that prognosis is the fact that they did gap it up with exuberance in the overbought area. So this kind of puts you in a situation where if you can pretty much analyze what the scenarios might be, especially after a doji, it just makes you or allows you to move a little bit faster based upon the evidence that we see, such as how they open after a doji. Uh-oh. So look what happened today in the Nasdaq. Kind of a doji harami. Stochastic's still heading up slightly, but still gives us the same criteria. If they open lower tomorrow, what's it telling us about the 200-day moving average that they couldn't get through? So now what's the next pattern setups that we can attribute to human nature? Well, we might see it come back to the T line and watch to see over the next few days if it does a bobble breakout. So at least it prepares us for knowing what to do based upon the reactions after a candlestick signal. Now, obviously, so I'm sorry, got a Sandy Skyping from Rotterdam. If it opens positive tomorrow, what's it telling us? It tells us they are not resisting at the 200. That our next likely target is probably up here at the 50-day moving average. So that's the first analysis that should be done every morning when you get up. It should be first in the first thing you think about is, all right, is the market still heading up? Is the market ready to head down? Is the market moving sideways? And then you extrapolate that into what you should be doing with your positions. So with that, what I'm going to do is we are getting prepared. Obviously, everybody's asking a lot of questions about the weekend of the training session on the 17th, which is showing the best patterns and kind of categorizing them to whether you're a day trader, a swing trader, a longer swing trader, or a combination thereof. Which signals and patterns you might want to use if you're a little bit longer term trader. So I'm going to go kind of backwards here. The number one signal that I always watch out for is the best friend signal. For two reasons. Because it tells me with a high degree of probability that the trend is going up, and it also tells me that that trend is usually going to be fairly significant as far as price movement. And the third thing is the frequency of this occurring is quite often because of human nature. When they get tired selling off, and when they turn around after an indecisive day and decide we really want to get back in this, that's what alerts you to be in a position that's not only going to produce a high probability of a profitable return, but also a high probability of a very big return. So when we saw this doji gap up on Chem, double bottom, gapped up through the T line, we recommended the buy. The next buy, though, was up here. So in my old days, I was like, oh, man, that's way too high. I don't want to jump into this now. Now I know what to do after a candlestick reversal signal. If I didn't buy on this day for some reason, because I may not have identified it, I was definitely buying on this because what's our result of candlestick signals and gap ups? Remember, where all other money managers say stay away from gaps because you don't know what they're doing with the price. You know exactly what they're doing with the price when you've got a candlestick signal in there. So the let's see if I got this one right. Here's a nice little breakout. And what makes this a nice little breakout? See if I can do this with, because when it came up, it did a doji and then a doji gap up. Now, there's a difference between seeing a gap up in an overbought condition and seeing a signal gap up. For example, this doji gap up is the best friend signal, number one. And number two, look where the doji gap up occurred. Right here at the 200 breakout. That means there's a completely different investor sentiment in that trend. Okay, let's see. I'll try to read the questions with my. I've heard you say the signals work the same on all time frames, but would a best friend signal work on a 1 or 2 minute chart too? Yes, if they occur. Now, usually on an intraday chart, obviously it's a continuous trading. It's very unusual that on an intraday chart that you have a gap up one way or the other, because usually it's trading from whatever time frame to time frame without gap up. The gaps obviously occur when there's a time frame where they're not trading, like from the open and close of or the close of one day to the open of the next day. So you're not going to see as many gaps, if any, on a continuous trading entity like the a forex or a something like the not currencies, crude oil and that type of thing that trade 24 hours. Okay, so the probabilities are that there's going to be an uptrend, but that doesn't mean you're guaranteed an uptrend. As soon as that uptrend starts, you go into your other analysis that you know is true in candlesticks, such as if you see your best friend signal right here. Let me make this bigger so I can see it. You stay long until when? Until you see a sell signal and a close back below the T line. So even though this started out as a potentially strong signal, we've got the benefit of seeing when there's your left-right bearish signal closing back below the T line. What's that tell you about the strength? It disappeared. So if you always keep in the back of your mind that approximately 1/3 of your trades are not going to work, and I say approximately, the more pieces of confirmation that we can put into our analysis, that keeps us out of bad trades that aren't confirming, and also gets us out of trades that started working and turned into a bad trade much quicker. I think I said that right. Oh, yes. So if we can take that 30% of the trades that aren't working and just add a few tweaks to it, so we knock it down to 28.2%, that doesn't sound like a huge difference, but the compounding effect of being in that many more correct trades or back out of bad trades quicker is going to dramatically improve your returns. Here's another one. So I'm showing the ones that don't work because there's our best friend signal. What do we want to see the next day? We want to see him open it and trade positive. Well, it opened and immediately started trading lower. So what's the simple solution to getting into this trade? If it opens here and starts trading off after a strong buy signal, I just usually wait to see when the profit taking's over. And then if they turn it around and come back up through this level, that's a pretty good indication that they're confirming the signal and the profit taking's over, you're heading in the right direction. In this case, if you're sitting there waiting and waiting and waiting, remember what the simple rule for Japanese rice traders are for staying out of a position. Or if you did get into this position, what's the simple rule? The Japanese rice traders say, if this is the candle that told us the bulls were taking control, and they are able to close it the next day more than halfway down that candle, the bears are still in control. Close out the trade. Now, when I say close out the trade, I used to hate to close out a bad trade because, boy, was that bad on my ego. I'm thinking, what the heck? Am I stupid, or did I analyze this wrong? Do the signals not work? What the heck's going on here? Well, what it boils down to is if you just assume that about 30% of your trades aren't going to work, now you don't have your ego involved. You say, yep, this trade didn't work, close it out and move on to something else. that gets me, even if it's above the T line. Yes, remember, the first criteria of candlestick signals are the signals. The T line is just a very good confirming indicator. Now, if I had been in this one, I would have closed it out. But if it had closed up here the next day, then I'd be ready to buy it back, because what that tell me? It told me they did hold at the T line. So once again, if I get into something to get back out and get back in and had this much of an expense, that's just the cost of doing business. I'm more concerned about being in the right direction and making a profit than trying to squeeze every bit of profit out of that one trade. Let's see, hold on. Can you show me what the T line? The T line is this black. This is the 8 exponential moving average. I think I've got all the moving averages. The blue line is the 50-day moving average. And then the 34 exponential also kind of works pretty well. But the black line is what we call the T line, trigger line. It's got a very simple concept to it. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. With the caveat that the further away you move from the T line, the higher the probability it's going to come back and test it. So it makes any sell signal that much more relevant when you move that far away from the T line. Looks like it's forming a wedge. Oh, it could be. What is this one? Yeah, but this one, I wouldn't even be paying any attention to this one if I looked at here and it didn't confirm. Yeah, it's going to take something to, now it may start showing up, yes, as a wedge formation. So obviously, that's one of the patterns that we look for, the wedge formation, like we saw in IDT. Let me draw this. Where you kind of had your wedge formation indicating when the breakout might be occurring. So the wedge formation is a relevant pattern, not a Japanese candlestick pattern. It's just a pattern that's everywhere, Western analysis. So the benefit we have as candlestick investors is we can see what type of signals are occurring right there. Notice how you had a doji right at the end of this wedge formation, and then they gapped it, or they took it up strong in this direction. Can a wedge formation be scanned? Oh boy, it can, but you usually don't need to. Usually a wedge formation will start showing up well before you even need to look for it. For example, let's say you didn't even have this on your charts. We happened to, because of the big breakout, and then watching to see if it was going to do with J-hook. And then after a while, we kind of concluded that it's in a wedge type situation. But even if you didn't have this as a alert for a wedge formation, this day right here, when you did your scan, which was one of the basic scans of which stocks had the biggest percent price moves, well, when you saw this after a doji, well, your eye can pretty quickly see, well, this is also a wedge formation. So it's not something you have to definitely look for. It's usually something that you've already identified if you're watching something. Let's see, higher and trade higher. Let's see, hold on. I got to see what must IDT open higher and trade higher tomorrow. Yeah, or as long as it stays above the T line right now. You can see your stochastics are still heading up. So I would be more inclined to think, even if it's a wobbly move, it's still going to be in an uptrend as long as it stays above the T line. Oops, we got to get going here. Hold on for a second. Okay. Sorry about that. All right. We recommended Etsy today because of the kicker signal, and we know which is the strongest of all signals. Is the kicker signal. So we were buying it on positive trading today. What's the expected result? A nice strong uptrend. Kind of the same scenario of why we're still hanging on to on deck, because it had a big kicker signal. Now it's pulled back and then hovered in here. So what can we kind of expect? Well, if they start trading this positive, we should probably be in a good strong uh, 45 degree. No, Etsy, you got to remember, you're buying the signal, not the overbought or oversold. What's the expectation coming out of a kicker signal? A good strong price move. This information right here told us, that's why we call it a kicker signal, that the investor sentiment was kicked in this direction. So it's going to usually last for a while. Any signal that you see with a gap up, usually it's best when you see it with a doji or a kicker signal. But if you see a bullish harami followed by a gap up, remember what a bullish harami tells us. The selling has stopped. When they gap it up the next day, what's that telling you? Not only has the selling stopped, but the buying has started. We're going to be showing the significance of the belt hold signal. Belt hold signal usually implies that they've wiped out a lot of sellers, that the next move is going to be fairly strong. The reason we recommended RYAM was there was the uptrend, there was a belt hold, took out some of the sellers. The implication is you're probably still going to be in a strong uptrend. No sound. Raymond always has problems with sound. Raymond, you got to figure out what's going on. And FRPT. Whoops. PT. There was a belt hold a couple days ago and bullish confirmation. I wouldn't be afraid to be buying this one. This is a very strong reversal signal. So quite a few of the ones that we are trading right now. For example, PTI, big gap up. And then the next day, here's one of the things that we teach in our statistical trading. But if you see a big, huge move like this, if I've got a huge move like this, I'm usually taking half off. I don't know what the percentage of this was, but let's say it was I can't even see the numbers. But let's say you had a 30% move in one day. Most people are happier than pigs in doo-doo to have a 10% return in their portfolio over the year. So if you've got a big move like this, what's your expectations? Somebody might be ready to take profit. We know that if they open lower the next day, there's a 90% probability it's going to be selling off, and you don't want to buy back until they come back up through this level. And or, look at our left-right combo right here on the T line. They're starting to move it back up. So whatever force was here, the profit taking's over, and hopefully that force is starting to come back into that trade. The definition of a belt hold. Which one was it? FRPT. Here's your trading range. And all of a sudden they gap it way down below the trading range and bring it back up into the trading range. Now that's different. I mean, there's different definitions or different criteria. all you have to do is be back, kind of back into the trading range. Or if it closes more than halfway up this candle, you've got a belt hold piercing signal. Or what other ones was it? I'm trying to remember. Kind of a belt hold bullish engulfing signal on AAOI. It's the belt hold is that they've gapped out of the trading range and come back in. The Japanese rice traders explain it as the sumo wrestlers fighting, and one's trying to back out of the ring, the other one grabs his belt and pulls him back in, and they're back to fighting again. Okay, let's see. So what we're looking for is things that tell us there's a new dynamic in a stock. Like this big gap up on big volume, kind of coming out of a scoop pattern, double bottom. And look what we had right here. Kind of a cradle pattern. Now, a cradle pattern is usually more a flat, but you can see you had a big down day and then a big bullish engulfing starting the uptrend. And when they gapped it up, notice where they gapped it up. They finally closed above the 50. Everybody and their brother is watching to see what's happening at the major resistance levels. This was a good time to be buying, and now we're probably on a 45 degree. Let's see, we did ResMed because of this best friend signal right here. Glue. Glue is a perfect example of if you're long, you stay long until you see a close below the T line. You can see what happened right here. Made this very simple. You had a doji right here at the T line and the 50. If they'd opened it lower the next day, you closed out the position. It kept you in for that type of move. So the probabilities just remain very strong that as long as you're above the T line, you stay long. And every time they come back, now remember, very, very, very few people, and statistically nobody, has the T line on their charts. So when they come down and they just touch the T line, that's basically a natural human support and resistance level. This one we've been holding. You had the little slow curve breakout, and right now it's trading up here after hours because of their earnings. We're re-recommending Yogi for tomorrow. Again, notice when they started selling this off with great enthusiasm, where did they bring it back to? Right smack dab to the 50 with a bullish harami, bullish confirmation. Now they're still bringing this back up. The reason this is attractive is if you're buying in here someplace, even if it only comes up to here, partway up that first move, you still got a 25, 30% upside. So the visuals of candlesticks not only allow you to see where the good buy area is, but it also allows you to estimate what percentage move you've got on these moves. Now, the ones that are hard to watch from day to day, Crone, for example, one of the weed stocks, is backed off today, but it's still above the T line. So what's the criteria after this little hanging man? Well, it's not a true hanging man because notice your stochastics aren't up in the overbought area. So I think this is some profit taking, and you stay long as it stays above the T line. CGC, same scenario, as long as it stays above the T line. And then TLRY, you can watch this one. If this opens positive and starts trading positive, got another signal, a stick sandwich. But it would be telling you they're staying above the T line, have a significant percentage move. Now, the reason you want to have, this is why we always emphasize that you want to see confirmation. This chart never comes up. I'm going to go right on. Oh, boy. Get the bill holds. Okay, let's run it through real quick on the biggies. This is why using the candlestick charts, you get much better grasp of what's going on in a sector. Here's Labu. After it did kind of a bullish harami and then came up above the T line, you're in an uptrend. You might, if you're not trading Labu, at least you know that that sector is acting strong. Vic, that's called a stick sandwich. A stick sandwich is, see if I get this right. A stick sandwich, let me make this big enough, would be a big move up, the next day a big move down, then the third day a big move right back up. So it's a stick sandwich. The stick is in the middle there. Stick, okay. I didn't have I couldn't read very well. I'm thinking, why did Marianne say suck? So that's what I get for Tesla. What type of pattern? Well, we can see on the big Morningstar signal that started the uptrend. Now we can see we've got a little J-hook pattern. And notice where they profit taking took them back to. Right smack dab on the T-line. I say that with emphasis because nobody has this on their charts. So it didn't move back to a level that everybody was watching because nobody has this on their chart. It just moved back to where there's a natural support of human nature. Oh, hold on. Let me see how far. Oh, okay. I'll do Amazon right now. Amazon on the weekly. I don't know. Weekly. No, that's a Morningstar type signal. Big down day, a day of indecision, and then the third day comes back and closes above the halfway point. So that's a good reversal. Now on the weekly, what do you want to see? You want to see them get up above the T line to confirm. So if they get up above the T line, where do you think your next target is? Probably back up into the existing trend. Nugget. We just did Nugget illustrating that even when you have a strong signal, you still use the rest of your criteria. You shouldn't see it close back below the T line. Right now, Nugget is nothing. Wouldn't be long or short. That Apple, as you can see, is having a little bit of a hard time getting back up through to the T line. So here's the obvious. Look how far away they moved Apple from the T line. Did a bullish harami. When it opened positive, where do you think your next target was? The T line. Now, what's our criteria? We want to watch to see what happens here at the T line. So if they open this lower tomorrow, if you covered your short position, you can get ready to go short because what's that tell you? The T line pretty much is still acting as a resistance level. Netflix. So Netflix backed off today, but the underlying factor right now is it's still above the T line. You don't want to see it close back below the T line because that would tell you that maybe now you're in this downtrending channel versus trying to get back up to the moving averages. Oh, don't tell me that. I've got it on the Steelers game on hold. Now, Nvidia, observe the obvious. Came up, came back below the T line. If you decided to buy in here, you should be back out of the trade. The probabilities have gone against you. And AMD, I'm adding to the biggies list just because there's so many people liking to trade it. All you can do here is stay long. Notice where the buying started, right smack dab off the 200. Okay, so here's some observations. if you're buying down here, what's the first thing you should be looking at to see what happens once it gets up here to the T line? Now you have a dark cloud, bearish engulfing at the T line, starts trading lower. You definitely should be back out of this and maybe even consider going short on it from this point. Now, these also illustrate LCI, illustrate the doji sandwich. Notice how this uptrend started. Doji, doji, bullish confirmation, doji right on the T line, doji sandwich, starting your uptrend. Now, would you have caught this? You would have if you had been buying down here. And this is the whole function of candlestick trading, is it puts you in situations where you're that is producing that type of returns for you. An IOTS, same scenario. Bullish harami, doji sandwich. Just the positive implications of a doji sandwich going through the T line tells you the probabilities are pretty strong. You're now in an uptrend. And Crocs, this is where we're going to start analyzing what do we do with this. Well, it becomes much more simple to analyze once you know what should happen from here. And why is this a good chart, even though it's up huge today? Look where you came from, out of a fry pan bottom, and how did you break out? With your best friend signal. That combination tells you there's a very strong, bullish force in that one. That's good stuttering. Reversal on SGMS was the piercing signal. And now you had a little left-right, not a left-right combo, a kicker signal through the 50, right here at this level. That tells you that kicker signal is you've probably got more upside. And Tripify, again, a doji at a breakout level. Now, this would have been more that you would have been buying on maybe the doji sandwich breakout right here so that you were in a position like this. Now, what do you do from here? Well, you expect a 45-degree, but your safety stop is right here. It shouldn't come back down through that level. Not only do the signals tell you when to get in, but they also tell you when to get back out. So it's a very common sense stop loss process. Here's another left-right combo breakout. Kind of coming out of a scoop pattern. Would anticipate a lot more upside on this one. And so we did AAOI and CNAT. So the reason we identify or analyze these patterns is because the patterns are what occur time after time because of human nature. All we have to do is analyze how to take advantage of those. That's why the session on the 17th is not to teach you so that you become an expert at 15 different trading patterns. It's so that you can pick out the 3 or 4 that you really identify or that you like trading and just master those. And I can guarantee you that if you've got 4 trading systems or trading patterns, I could make a good living, which I do, just trading off the best friend, the kicker signal, the left-right combo, the fry pan bottom breakout. With those 4, I have more trades than I can handle, which means I got the opportunity to cultivate which ones I want to be in or which ones are the best. J-hook pattern on CNAT, and I think we're recommending this one for tomorrow. Another J-hook pattern, and look where you are right now, right about at this breakout. So if this breaks out, what's our magnitude of move? About the same as this right here. Okay, let me answer a few questions. We're not going to do stock charts because I can't see most of them. What time frame are the green and gray lines? The little green line is the 3T line, which usually becomes more effective the further away you move from the T line. The gray line is the 34, and it works reasonably well enough to have it on your chart to show uh, where there's support and resistance. Would you discuss Netflix on the basis of what kind of candle it could draw tomorrow and the indications for reversal? For example, what if tomorrow it draws a green candle about the same length and parallel to the green and red candles that are created before tomorrow? Sorry, I'm reading that so low. I'm reading one word at a time. That was on Netflix. You can see you've got kind of a dark cloud. You're not in the overbought condition. Kind of nudged here at the 34, but it makes it very simple. If this is a relatively, let's say a dark cloud, and it's supported at the T line, if it opens lower, what's it tell us about our trajectory? It's kind of turning sour. You probably don't want to be in it. On the other hand, if it starts trading positive, what's it telling you about the T line? The T line was acting as support. All right, we're only going to analyze this one. Facebook right now with a close, you had a shooting star doji and bearish confirmation today. What's it telling you about your downtrend? Your downtrend, if this opens lower, you could probably be shorting it with the idea that it's coming back down to the bottom of that trend channel. Obviously, when you got up to the top of the trend channel, you can see they opened it and sold it off. Took it up, sold it off. Took it up, sold it off. So you can see there's really no strength in this one. No. Let's see. Let me go up one. I mean, would one be nice to know based on the candle drawn tomorrow what trend it looks like it's going to follow? Yes. Well, exactly. If it opens positive, it's pretty much, that's on Netflix. If it opens positive and trades positive, it's pretty much telling you that more than likely the T line's acting as a support level, that your uptrend's in progress. And Sam, no, we don't care about fundamentals. 2 touchdowns. Don't tell me that. You are spoiling it. I was gonna. Oh man. That's right. Sam, that's a question that most people ask. Do you care about fundamentals? And the answer is no, for 2 reasons. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. Now, the fundamentals are the information that everybody is using, say everybody, as a major part of their decision of whether they're buying or selling. So we don't have to analyze the fundamentals. All we're analyzing is everybody's decisions that they've made because they've analyzed the fundamentals. So if you go back to the very basic definition of candlestick signals, which is the signals are the accumulative knowledge of everybody buying and selling during a specific time frame. They're making their decisions based upon what the market is doing, what external events are doing, what the fundamentals are, what everything that is involved with that position. They're making their decisions. We're just seeing what their cumulative decisions are, with fundamentals being part of that. Let's see. Okay. Okay. All right. I'm sorry to cut this short. My eye, I'm sitting here squinting. So the important. Oh, Becky, you want to put the link in for Thursday? For the 17th. Now remember, if you're a non-member, as a member, you get a $120 discount for the weekend. So the logic is even if you become a member for 1 month, you become a member and then do the session, you're still coming out ahead. So the trick is that once you become a member and you see how much information is conveyed during the chat sessions during the day, I put out 2 or 3 stock picks every night. Last few nights we haven't been doing them in video because my eyes, but I usually put out a video 2 or 3 minutes telling you what the market's doing and why we're buying or shorting specific stocks. Not so that you have stock picks, but you're able to see what the analysis is for the reasons for buying or selling them. All right, everybody. Have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.